Friends, I hope you're all doing good. Welcome back to my channel, My Three Investments. Please subscribe to my YouTube channel and support because it takes a lot of effort to prepare the content and as well as to post it here. So today's topic is about two topics. One is the fundamental analysis of the IDFC First Bank, and also the reason why I have sold my IDFC First Bank shares and why I shifted to IDFC Limited. I'm going to explain it used to. Let's get started. First one is the fundamental analysis of the bank. So let me start with this. So first with the management. Management is one of the reason I think why we have to invest because Mr. V. Vaidyanathan sir actually is a well-known banker. So he has got a lot of experience in the banking industry, as you can see. So yes, actually he was also one of the pioneer in building the retail-related banking related stuff in ICC Bank. He was also actually CEO and managing director in ICICI Prudential Life Insurance as well. And as you can see, he was also country head actually in 2000 to 2002. And here as well, this is also retail banking, and this is also retail banking. And he was also actually running almost like from 2010 till a merger. He was actually working with Capital First. He was founder as well as the chairman, and he was now currently is the managing director and CEO from December 2018 onwards. This is his profile. I don't want to go in detail because this kind of information is really available about V. Vaidyanathan sir, and also he's very transparent as well as very, you know, he's got a lot of gesture in donating the shares to is one of his earlier school teacher as well as his cab driver and all. He is also actually has a foundation for doing the good social work. So let's come to the bank. Bank is really the new bank in terms of technology wise. They are really good. This kind of a universal bank. So they are into everything. In name, related to consumer. So even one good thing about this one is the fast tag related thing. Fast tag. This bank is one of the leading fast tag service provider. So you can also see other than these, they are into wealth management, credit cards, and all these things. Anyway, I don't want to go in full into details. As you can see, as on September 30, this actually slides I have taken it from the investor presentation from after the quarterly result. So the bank, loan book is actually 1,83,000 crores. But you can see here it is fully diversified. It's not just restricted to wholesale banking or something. As you have actually heard, a lot of earlier cases related to Yes Bank and as well as the SPA scams and all. If you give money to usually the big corporates, there is a chance that they can run away with the money, and because of that, the whole bank can collapse. The best example is the Yes Bank case. They're given the money to large banks and it collapsed. Even Punjab National Bank as well as the SBA also had given huge loans, but somehow because of their public sector banks as well as they got huge other loans because of other deposits and other things, they were able to survive, and also RBI and the government supported them to survive. So why I like this bank is it's very small bank. This is actually, if you see the Kotak Mahindra Bank, it is actually kind of a double loan book value is there. So this is actually 1,83,000 crores. This is not much. This is very small book. As you can see, this book is fully diversified, mainly into retail segments. So like consumers like us, definitely we will be scared. We will also take less amount of money loan, and also we are very much kind of we will not run away with the loans what we take. And also even there is no chance for us. They will send these collective agents and all, they will follow up with us. Actually, we are also scared about our neighbors and all, what they will say like that. Definitely we will give first priority to paying back the loan. That's why these kind of loans are very safe. So one good thing about deposits, as you can see here, so there was a merger happened, as I was saying, Capital First and IDFC First Bank. This is what the scenario when the merger happened. 73% was this wholesale deposits were there. Only 27% of the deposits were retail. Now you can see the picture. It's almost like the opposite. So the retail deposits usually are sticky. That means if the people are keeping the deposit, retail customers usually they will not take it out easily. And even if they take it out, it could be small ticket sizes. It will not be like a wholesale wholesale companies, those who will put the deposit of 100 crores, 400 crores just for parking, and then they will pull it out. That will actually have a huge impact. But this is granular deposit from retail customers. That's why this is really very very good thing. And also you can think of here the growth what has happened. Why I always recommend or like this bank is the kind of turnaround what is happening. It's really huge. That's also that is regarding the deposits. And also there were earlier actually there are some legacy I cost borrowings, 8.9 to 8 between 8 to 9%. These were all the earlier borrowings. As you can see, as on September 23, this 15,000 crores is still there. But this is keep on reducing once this full thing has been paid it off. So then the cost of borrowings for the bank will definitely reduce. Currently the banks, in spite of this having these legacy borrowings, so banks current deposit cost of borrowings almost like 5.3 or something. If these kind of legacy cost borrowings also goes off, then definitely it will increase by 100 bps points. 1% it will reduce. Further it can come to maybe 5 or 4.5 or something. You can think of, if the bank is borrowing at 4.5 or 5, even if let's say 5.5 as well, and if they're lending you as a personal loan, at credit card loan, vehicle loan, all this at 12% or something, you can think of this difference, between 5 and 12, so almost like 7% margin they will be having. That's how the bank make the money. So this is regarding the. Yeah, next let's come to net profit. Okay, you can see here the quarters here. Even though it's a little bit confusing because it's not text to the below. The bank has come back now, becoming green. I don't think so. These profits will go down below this. It'll always go up. So I mean, after the merger in 2018, so there were two big things happened. One is actually there was a demonetization happened, and another thing is also the COVID come up. Because of that, they had actually tough time, so they had to increase their provision and all. Now they cleaned up the bank, and now the bank is really good in good position. So they are actually posting, from last 3 4 quarters they're consistently uh, posting good profit. So this is just to give you a glance about during the merger they had actually set up a target what we are going to do like that. So this is one of the good thing I like about the management is they're very very transparent. Whatever they're going to achieve, they already tell you that what they're going to achieve. This is about capital adequacy ratio. If you are actually in a banking sector, you will be knowing this. So this was the target actually earlier, at the merger time. uh, this they wanted to maintain. Guidance was given this much, and they are actually on track. And also CASA deposits. CASA deposit means customer current account and savings account money what will be lying in the bank. So they are targeted for 30%. But you can see here this is they really already done good. It is 46.4%. And the number of branches they have guided for actually 800 to 900, they are already achieved actually 862 branches now. Similarly, CASA and term deposits, they wanted to have 85%. So this is also on track. Now September 23, they are already 81% they achieved. And this one, yeah, certificate of deposits, this one they wanted to have less than 10%. This is also achieved as you can see. Yeah, this is LCR. I mean the amount of money what they're keeping. This is also achieved kind of thing, but they're still tracking it as on track. Now they wanted to actually build the retail book loan. It was 36,000 back then. Now they had to put a target of 1 lakh crores, but this is already overperformed. Before the date itself, it is already achieved. And even the book, this guidance for the retail book, they wanted to bring it to 70%. Now it's already 80%, it's achieved. And wholesale, they wanted to keep it down below 40,000 crores. This is also doing good. They want to bring this infrastructure loan. I think the IDFC was earlier kind of a infrastructure bank. Now they had a target to bring it down to nil in 5 years. So they are really doing good here. I mean, they almost brought down the infrastructure loan. It's only 3,000 is there. Why they want to bring it down is infrastructure usually is got high NPA, and also big companies will borrow. If they don't pay, I think that will become NPA. It's huge risk. Next one is also regarding the asset quality. As you can see, top borrowings, so earlier it was 12.8. Now they wanted to bring it down to less than 5%. This is nothing but big huge money what you're paying. If you are lending, if you are paying, what is the ticket size? If you are paying, for example, 5,000 to one company, so that is a huge money. So that is the risk also. If that company run away, then it will become NPA. That's a big risk. Now they actually almost, this is regarding this top 10 borrowers should be less than 5%. This is achieved. And a very very good thing is, I mean, this NPAs, gross NPA and net NPA, this is also on very 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 good. Gross NPA means the guys who are not paying, and where they would have already made the provisioning. That is gross NPA. Net NPA means, I mean, so sorry, gross NPA means what is the guys who are not paying percentage of the loan book. And net NPA means this is actually provisioning has been already done. You can see here 85% of the provisioning has been done. This is also really good thing. This 0.68%, if they maintain for a long period of time, that will be really very very good. And also these GNP and NPA targets also been achieved. And net interest margin, this is also really good. So I was telling earlier, if the cost of funding is 5%, if they're lending it to 12%, credit card and all, it will be more, sometimes 15%, 20% like that. Even personal loan also it be 15% like that. But here also they are on track. And cost to income ratio here, I think they are a little bit lagging because they're opening a lot of branches. They also built up a world class technology. They implemented IT and all. They spend a lot of money there. Because of that, the cost is a little bit actually struggling here. But they want to reduce it further. Uh, Now they have actually, it is 65%. Yeah, let's see how they will do it. If the cost to income ratio is not coming down, then I think it will impact the profits. So return on asset, they are guiding for 1.4 to 1.6. This is on track. And return on equity, they are guiding for 13 to 15%. I mean, they are guided when the merger is happening. So it's also on track actually. These 3 points still they have to achieve. So anyway, this bank at a glance, as you can see, this is the loan deposits I already spoke, diversification, retail deposits, and Kasha ratio is 46.4. Okay, this I spoke. Core operating profit, year on year it is really increased, and even the on the half yearly as well, it is actually achieved this much. This is after tax 1,500. Yeah, this is also going really good as of now. So that valuation perspective, what I am actually explaining this one is, so currently the book value is 43.5, as you can see here. So this is actually after the quarterly result. After the 3,000 crores they've raised in October, after this the book value is this much. So usually our Indian banks usually get a, for example, if you see the big banks, HDFC, ICICI Bank and all, they're getting at least anywhere between 2.5 to 3. Sometimes, based on if the cycle is really good, they will go up to 4. But even I don't want to go there. Even if you give a moderate, price to book earning ratio of 2.5, then also it should be 108 currently. On a bullish basis, if you give a price to book value of 3, then the price should have been 130. That means it is undervalued as of now. It is now the current price is 84.4, but this would have been 108. But because of this, there was also an RBI, RBI rule that they should also increase their capital. Because of that, I think So there is also a little bit correction in the market, but however, this is what my valuation, fair valuation, uh, should be. But currently, it is undervalued as per me. You know. So next comes the merger, and also the reason for selling IDFC First Bank and buying. Why did I buy IDFC Limited? So I think there is already a merger announced. So this IDFC Limited, which is not having any business as of now, will be merged with IDFC First Bank. So these two will become one. So this was also announced actually earlier on the 4th of July. So if you do the merger, what are the, I mean, these merger ratios? So if you have 100 shares of IDFC Limited, you're going to get 155 shares of uh, IDFC First Bank. So that's what it is. If you have one share, it's kind of 1.55 kind of thing. So another good thing is, here, uh, this they are also uh, removing some shares. So currently, when the announcement was done, the current total holding of the IDFC Limited was 260.64, but they're going to remove some of the shares, and they're going to merge, and they're going to issue 248 crores shares of IDFC First Bank. So that means this is the current holding of IDFC Limited, and once the merger happens, so you can see here the difference of these two will be removed. And also another advantage is actually the book value of the IDFC First Bank will be increased. And apart from these, there are almost like 600 crores of money is actually currently lying with IDFC Limited. So that will also come to IDFC First Bank. That will also give booster to IDFC First Bank, so that they can lend this money, as well as actually this will also help them to increase the book value. So now, if I calculate, after the valuation after the merger, if the merger will happen, I don't know, maybe in 6 months time. I'll tell you in the next slide the timelines. So if the merger happens, so then the book value should become approximately 46. 46 into 2.5, if you do, it should be 115, and 46 into 3, if you give 3 times the book value, it should become 138. So this should be the value of the IDFC First Bank, after the merger. But currently, as you can see, the current price of IDFC Limited, I'm making video on 20th November, it's 118. If I divide this one by 1.55, then the price of IDFC First Bank comes to 76.13. That means the price of IDFC Limited is 84.4, and now you're getting at 76.13. So that means you're already getting an advantage of 10%. Just to get this 10% advantage, I have switched all my, I sold IDFC First Bank and bought IDFC Limited. Of course, you need to consider, if you have a broker who has got a less these brokerage charges, then you can do it. And second thing, also taxes. If you are already holding the share from long time, before 1 year, then your tax what you need to pay will be 10%. Then that makes sense. You need to calculate whether it will be 10%, if you switch it, whether it will going to be advantage for you or not, like that. So luckily, what I done, when the price was under, I sold it, IDFC First Bank. So then I bought IDFC Limited. Of course, I bought it around 123 or something, but now it is corrected to 118. But you will have an advantage, if you can consider this as well. So regarding the timeline of merger, I was talking about. So the approval has been already received from CCI, NSE, BSE, and pension regulator. So the approval is still pending from RBI, NCLT, and the respective company shareholders. So as for my optimistic view, the merger should be completed by March 2024. Then definitely IDFC First Bank will get advantages of what I said. Some shares will be extinguished, plus book value will increase, and also they are also going to get some cash. You know. So these are all the news items where I pulled out. So you can see, also you can search in Google. You will get these news as well. So these mergers are already completed. I hope this video was helpful for you if you are in a dilemma to, first of all, to buy IDFC First Bank or not. And second thing is, if you're already holding IDFC First Bank, and you can also take an advantage of this 10% by switching to IDFC Limited.